Saudi Arabia had a choice of either cutting back its own production to support the price of oil globally, or keeping its production at previous levels and letting the price plunge. Well, they chose to let the price plunge. They're going to push our frackers out of business. And then when the U.S. supply has dried up, they'll let the price go back up.
One new gold stock making big headlines since its start last April, acquiring gold for $5 to $10 per ounce in the ground, which is dramatically lower than the $50 to $100 per ounce in the ground other companies have been paying. To learn more about what hard asset investors are calling a mineral bank, visit futuremoneytrends.com/investright.
Hello, everyone, and welcome into CrushTheStreet.com. I got a returning guest today. His name's John Rubino of DollarCollapse.com. He's been a voice outside of the mainstream news, speaking truth for years now. He's an author, an investment advisor, and an amazing educator. John, thanks for joining me today.
Hey, Kenneth. Happy holidays.
Happy holidays. I hope you and your family are enjoying the holidays. And thanks so much for coming on, actually, in between the holidays here and taking some time to talk with us. I'd like to talk today. You've covered Brazil for some time now, and I want to talk to you about the failures of sovereign wealth funds. And Brazil is in the deepest recession it's seen in 25 years, and it's dipping into its sovereign wealth fund to stabilize its economy. And just recently, Brazil dipped into their sovereign wealth fund by $620 million. So let's start off by talking about them in general and why they are here and why they exist.
Well, the Brazilian story, first of all, is that they were one of the really well-run Latin American countries at one time in the not-too-distant future. But in response to the 2008-2009 crisis, they kind of gave in to temptation to just let the government run wild. They borrowed way too much money, and now they got a financial crisis. And they're, as you said, they're at the point where they have to dip into their sovereign wealth fund, which is basically the country's savings account / brokerage account. And what these things are is they're accounts that governments set up when they've got extra money coming in. Generally, it's resource-based countries where, if the oil price goes way up, Saudi Arabia has lots of extra money, they've got to do something with it. And they funnel it into an account, or you could call it a hedge fund, an investment company, run by the government, but that invests that extra money with the idea of making it grow so it can be used in the future. Unfortunately, there are a lot of pitfalls when you set up the government to be a money manager. One is that government bureaucrats just aren't good money managers by institutional nature. The other is that they're extremely corruptible. When you set up this huge pot of money, and then you've got the elites in a given country who are working for the big banks or own pieces of the big banks or the mining companies or whatever, surprise, surprise, a lot of that money gets funneled into those companies. Like in Brazil, Banco do Brasil, the biggest state-run bank, was the main holding of the sovereign wealth fund. Well, was Banco do Brasil the best possible investment in the whole world, or was it connected to a whole bunch of people in the government who decided to funnel a bunch of money into it? The latter, I'm sure. And so that tends to be what happens with these sovereign wealth funds. They're run badly because they're run politically. And that's just what happens when you put the government in charge of stuff. So now that commodities are falling, a lot of the countries that depend on revenues from commodity exports are really feeling a pinch. Saudi Arabia, again, is the best example because they make huge amounts of money from their oil exports in good times. And their people basically don't work. They're all on welfare. They just get checks from the government each year as the government spreads the oil wealth around. Well, the oil wealth has evaporated now, and yet these welfare programs that the people in Saudi Arabia benefit from are still kind of in place. So the government, for the first time, is having to cut payments to its people. In other words, they have super cheap gasoline there, and they're having to lower or get rid of the subsidy on gasoline. So gas prices are going to go up to world levels, apparently, in Saudi Arabia. And they're going to risk serious political turmoil because of this, because their people are so dependent on the government. They don't have like an entrepreneurial class and a creative class. There's nothing like that in a lot of these countries. And so they're going to, go ahead.
Well, I was just going to ask you, how was it instrumental in 2008? So, for instance, I know that they were supposed to be there for the different banks, and if there was a crisis. I'm not saying it in a good way, because obviously things ran by the government we know aren't going to end up well. But how were they instrumental, in something like a 2008 crisis?
Oh, the sovereign wealth funds?
Yes.
Well, they weren't as big back then as they are now. So this time around, they'll be more instrumental in the coming crisis. But back then, they were still very big, and they tended to increase the volatility in the market, because they would have to pull back when, for instance, oil prices went down back then. And so they basically either sell their investments directly, or they pull money out of the investment managers that they've engaged to run their money, who then have to sell whatever it is they're invested in. And so these funds, because they're these big lumbering chunks of dumb money, tend to make market volatility worse than it would be otherwise. You can't call, for instance, our Social Security fund a sovereign wealth fund, because we just spend that money. We make believe that there's a trust fund there, but there isn't actually any money in the Social Security fund. But these other funds, they actually have a lot of money, and they're investing it unwisely, and they're having to pull it back out when their revenues drop. So they make a commodity crisis that much worse by having to sell at the very bottom. They put huge amounts of money in at the top and invest it when, for instance, oil prices are at their highest. And then when the cycle turns down, they're pulling money out at the very bottom. So, these are two really antithetical concepts, government and money management. They just shouldn't be mixed, and we're finding that out, So in the 2016-2017 crisis that's probably going to ensue from the commodity crash of 2015, you'll see sovereign wealth funds playing a role, and probably a pretty public role, and really making things worse.
Well, sovereign wealth funds are another reason I would suspect that the people in power, government, and central banks would want high oil prices, because obviously the funds benefited greatly, the majority of the funds benefited greatly from high oil prices. And this is as opposed to allowing gold to go up. So what's the dynamic with oil and the incentives of the powers, the governments, to want it higher or fine with it down? What are your thoughts on that?
Well, Saudi Arabia, for instance, the biggest oil exporting country in the Middle East, obviously wants higher oil prices in the long run. But what they've seen in the last few years is the U.S. coming up with a new technology, fracking, which allowed us to get at a lot of oil and gas that we couldn't reach before. And leaving aside the environmental issues with fracking, it did let us get a lot of gas and oil in the short run. And this put pressure on world prices. So Saudi Arabia had a choice of either cutting back its own production to support the price of oil globally, or keeping its production at previous levels and letting the price plunge. Well, they chose to let the price plunge because they're kind of taking a long view here. They're going to push our frackers out of business. And then when the U.S. supply has dried up, they'll let the price go back up. And so at least that's what they hope. And there's no guarantee that it works out, because prices are down further, I think, than anybody expected in this cycle.
Yeah. And then if we go into a recession, a deep recession, who knows what that's going to do to the whole supply of oil in the markets.
Yeah, the supply of oil is still exceeding demand, which means we're having to find places to store the oil that we're pumping out of the ground but don't have a use for in the short run, and we're running out. We've got super tankers sailing around the ocean with nowhere to go. They go from one country to another, and there's no place to put the oil that they're carrying. And so to the extent that that's continuing, that kind of implies a serious break in the price somewhere in the future to choke off supply and to pump up demand to the point where we aren't just filling up all our storage capacity. We're actually drawing down storage capacity. That might take $25 a barrel to happen. There's no way to know exactly where we bottom out, but it's completely conceivable that we have another $10 down leg in this bear market in oil because of that. So there's one other factor at play here too, and that's geopolitics. We're mad at Russia right now in the U.S. and Europe, and so we're taking steps to lower the price of oil in the short run to punish Russia because they're a big oil exporter. And so that's another layer of complexity in this kind of a market. And Russia also has a sovereign wealth fund, so you've got those guys out there trying to decide what to do with their investments if the Russian government needs to take that money back and spend it on day-to-day operations. Big mess coming in 2016, Kenneth. That's the short answer to the question.
That's the understatement of the day. John, when it comes to the dollar we saw get relatively strong over the last year and a half or so. And we've seen foreign countries, prior to the dollar strengthening, borrow a lot of money. I have a number here, $9 trillion US dollars, while the dollar was relatively weaker. And now that the US dollar is strengthening, debtors are having trouble being able to pay their bills in a strong dollar environment. How bad can this get?
Yeah, this is an interesting part of the story that is just beginning to hit the media. Basically, the developing world borrowed a lot of dollars back when the dollar was relatively weak, like you said. And for instance, in Brazil, you could borrow US dollars and then invest it domestically in Brazil with a reasonable chance, a reasonable hope of generating plenty of cash flow in Brazilian real to pay back your dollar investment or your dollar loans. Well, what happened was instead of going down versus the real, the dollar went way up. And so Brazilians now who've borrowed these dollars are generating revenues from the projects that they financed in cheap real. In other words, in a depreciating currency that doesn't allow them to necessarily to pay off their dollar loans, because all of a sudden the real cost of their loans has gone way up along with the US dollar. Now, there's $9 trillion of these kinds of things out there, which that's a very big number and could cause some serious trouble, but it hasn't yet, except for one company in Mexico. Mexico's biggest construction company just defaulted on its debts, its dollar-denominated debts. And so that's a bit of a sign of things to come. They defaulted on about $1 billion worth. And so the amount of dollar-denominated debt that's out there in the developing world is 9,000 times that high. So there's an awful lot that can go wrong in the year ahead if the dollar stays strong. And now you've got us in the U.S. You've got the Federal Reserve raising interest rates, which, other things being equal, make the dollar stronger. And so if the dollar goes up next year, it makes a lot of problems around the world worse. It makes the developing world a lot more financially fragile because they've got all these dollar-denominated debts that they're not going to be able to cover, and you're going to see a wave of defaults in the year ahead. And it also makes life hard for U.S. corporations because we're trying to sell stuff to the rest of the world, but we're doing it with an appreciating currency, which means our prices go up day after day, week after week. And so U.S. corporate sales and earnings are both falling right now, and the big culprit is the too strong dollar. So again, if we make the dollar even stronger next year by raising interest rates, when the whole rest of the world is cutting interest rates, then you'll see multiple defaults across the developing world and falling corporate profits in the U.S. That's a combination that doesn't really leave you anywhere to hide, right? Because you can invest in emerging market stocks and get crushed, or you can come back here and invest in U.S. blue chips and see their earnings go down and their share prices follow. So it makes the world a really, really dicey place a year hence.
It's a really difficult place to make money in this environment. it's very challenging to get out there and to be successful. And that's, I guess, why you need to be on top of it and really do your research and invest in inevitable trends that are going to work out for you. You were going to say something?
Yeah, I was going to echo what you just said. It's very hard to make money now. The broad U.S. stock indexes did not go up in 2015. So you didn't really make any money in stocks if you just invested generally in a diversified way in the U.S. last year. Government bonds didn't make you any money either. A bank account, of course, didn't make you any money. And gold and silver lost you money in the past year. So almost any place that you look did not do well in the last year. So you're right, it's very, very hard to make money in this kind of an environment. It feels like a lot of trends have kind of run out of steam. You know, nothing has hit the kind of wall where it just collapses, except for commodities. Mm-hmm. But a lot of things, a lot of financial asset trends seem to have run their course. And it'll be interesting to see if in 2016, if they reverse course and start heading back up again, or if they roll over. Because the normal way it works, when markets aren't manipulated by governments and central banks, is a trend goes on for a while, and then it gets harder and harder to continue, and then it flatlines, and then it falls off the table. And then you get a big correction, big bear market. Yeah. And so in normal circumstances, you'd think that's what would happen in the U.S. with our equity markets and probably our government bond markets. But there's so much manipulation going on out there. There's so much money being created by central banks and so many other kinds of things going on that there's no way to tell whether history is any kind of a guide to the future anymore, you know? And so that makes it doubly scary because you can't place educated bets on trend reversals now, which you might normally do. Like go to the movie The Big Short. You see these guys figured out in 2005, 2006 that the mortgage market was vastly out of balance and that you could eventually make money by betting against it. Well, there's lots of things that are like that now, but because the level of government manipulation of the financial markets is so extreme, it's not necessarily true that you can take the lesson of 2006 and apply it to today, because you just don't know what they're going to do in the realm of money creation that might short circuit fundamentals. Mm.
Well, John, I got to ask you about 2016. Who do you think is going to be president? Not as an endorsement, but who do you think would you say is likely to be president?
Hillary Clinton, 65% probability.
Really? Wow.
Oh, yeah. Yeah. I mean, if the Republicans tear themselves apart at the next convention, it's going to be very hard for them to recover from that. And if they nominate Donald Trump, it'll be very hard for them to recover from that. He doesn't get a lot of middle of the road votes. He gets, he has a very, very rabidly enthusiastic 20 or 30% of the populace. And I don't think he gets a lot more than that.
Did you see that poll that they came out with showing that people are a little more hesitant to endorse Trump in public, but his online statistics are actually higher than what they're getting on the street and over the phones because people are they're too embarrassed to say they endorse a candidate who is otherwise being called a bigot and a racist and,
a buffoon.
Yeah, exactly.
Well, but you know what? He won't get 50%, though. I mean, maybe he gets 35 instead of 32 or whatever, but he's not going to get 50% of the broad populace. But he does symbolize something really important, because you look around the world and you see formerly fringe candidates and parties moving into the mainstream because people are so fed up with the status quo that they want somebody who's just going to tear it out by the roots and start over. And that's a really attractive argument now. That's not a good strategy for governing, but it's a better and better strategy for getting elected. On dollarcollapse.com, I have a series of articles that I've been running called Why We're Ungovernable. And the premise is that when you borrow too much money, everything gets hard. If you're a country and you're the government running a country, if you're over indebted, you can't manage things the way you used to be able to because you don't have the money to buy off constituencies and finance elections and do all the things, generate growth and jobs, et cetera. you're going broke, you can't do those things. And so people and replace you with somebody else who then fails and gets replaced. And every election is a throw the bums out event. And the system kind of devolves into chaos. Well, we got that in Europe, obviously, right now, and the Middle East is in flames. And in the U.S., Donald Trump and Bernie Sanders are examples of this. These guys are far out of the mainstream and would be highly unlikely to be competitive back in the days of, say, Ronald Reagan or Hubert Humphrey.
They're appealing to the frustration on both sides.
Exactly. So you see that in Europe, where parties of the far left and of the far right are putting up some pretty good poll numbers right now. So it's not that the populace is moving one direction or the other. Everybody's just fed up. And so Trump and Sanders are emblematic of that in the U.S. So if the Republicans, at the end of the day, nominate somebody like Marco Rubio, who's kind of, a mainstreamy kind of guy, and he's the candidate, then that increases the odds of the Republicans winning the White House.
Interesting.
But it's looking like that's a less than 50-50 chance right now. I mean, if the election or the primaries were all held today, it would be Trump and Cruz.
Yeah.
And those guys, they qualify as formerly extreme, out of the mainstream people, like the National Front in France or Podemos in Spain. They're kind of in that mold. And I think a mainstream candidate, even with all the baggage that Hillary Clinton has, she would probably get elected against those guys, just because it's really easy to paint them as extreme or crazy or just weird to middle of the road voters. So yeah, but I think that they're way more important. Trump and Cruz are way more important for what they symbolize than what they offer. Because they're the guys who represent the anger that's bubbling up in the U.S. because the old system doesn't work anymore.
Right.
And it's a shame that Ron Paul didn't attract as much attention, because he was an outsider who actually had a really good set of ideas. I would have loved to have seen him getting 20 or 30%, Bernie Sanders kinds of numbers, because then it would have brought libertarianism to the middle of the political debate. That would have been fascinating.
Yeah. Well, Rand Paul's in there, but he's not really taken off at all in the polls, unfortunately. He's
not as consistent as Ron. With Ron Paul, name the issue, you know exactly where he's going to stand, right, and he's going to explain it in a way that's better than you could have explained it. And that's not so clear with Rand Paul, because he's kind of straddling libertarianism and mainstream republicanism.
Yes.
So it's harder to know what exactly he is. So, until he gets a really sharp political profile, he's just going to end up making people mad, because there's always something in the libertarian philosophy that scares people. And if it's not explained well, then it sounds crazy. And, same thing with a lot of mainstream Republican policies. You really have to explain it clearly, like Ronald Reagan did. You couch it in terms of human freedom, and it makes sense. But you couch it in terms of corporate taxes or something like that, nobody wants to hear it.
John, in just wrapping up, I want to talk about inflation and taxes, and in line with what we're talking about, presidents. Do you think taxes are actually going to go up as a result of a new president, or are they just going to continue hiding taxes in inflation going forward?
Oh, I'm going to give you a radical answer here, Ken. I think taxes will be abolished in 2 years.
Wow.
And the reason for that is I think that we're at the point where, the debt jubilee idea, where we just print a lot of currency and forgive a lot of debts with it, and modern monetary theory, which is kind of kissing cousin of the debt jubilee, will end up being policies that sound like reasonable alternatives in the chaos that's going to come from all the stuff we talked about earlier in our conversation. And so I think that governments are going to finally come to the conclusion that, we got a printing press. Why do we have to tax people? If we're going to create currency that's equal to, 20% of the government budget this year. Why don't we create currency equal to 100% of the government budget and lower taxes to zero?
Wow.
And that's going to sound good pretty soon. It's going to sound like a completely reasonable idea. Of course, it's crazy because it comes with the proviso that governments will only create as much currency as they need to do the stuff they're supposed to do, right? But if you turn governments loose and let them define what they're supposed to be doing, they'll grow to infinity. And they'll just create as much new currency as it takes to rule the world and never lose an election, et cetera, et cetera.
Yeah.
So you create a currency crisis, and I think that's what's coming is we're going to end up just running the printing presses one way or another, either, a debt jubilee or you saw in Finland what they're doing, right? They're proposing an 800 euro a month income for everybody automatically, where they're just going to print that money. So if you do that and you get away with it and it's popular, why not take it the rest of the way and say, okay, well, you know what? We'll just finance the rest of the government the same way. We'll just print new currency.
Yeah.
And so I think that's the next stage of the debate. And as crazy as it sounds, I think it's going to get a enthusiastic hearing from people who are over indebted and desperate and don't know where to turn and feel like the world's spinning out of control, yada yada, which is what happens when you borrow too much money. So
well, what's sad is the lowest end of income earners gets screwed the most because everything gets more expensive for them. They can't afford to buy homes, they can't afford to buy gas, they can't afford to buy food, and it's worse than actually raising taxes on the quote-unquote rich, because they're always trying to say, hey, we need the rich need to pay their fair share, but inflation actually attacks the poorest people the most because the rich people actually own assets, which in a dollar crisis scenario should go up over time. And that's what we've seen even as QE injected into the economy over the last 7 years. The rich got richer and the poor got poorer.
Yeah, inflation helps rich people and hurts poor people. Even though the original idea of increasing the money supply and increasing government spending, in theory, that's aimed at helping poor people by creating transfer programs and stuff to moderate inequality and smooth off capitalism's rough edges. But once you take it too far, the people who are trying to save get hurt because interest rates are too low today to give them any kind of a return, and the cost of everything goes up, and they don't own any of the assets, like you said. A rich guy is maybe his next yacht is more expensive than his current yacht, but his London penthouse is going up more than enough to offset the extra money he has to pay to buy his yacht. So he makes out, and the average person with a bank account just gets crushed. So
John,
it's really despicable what's happening.
That's the average thinking that most people are not going to get. That's the problem. People are not going to understand that.
No, they're not. But and that's also what makes people susceptible to the idea of QE for the people. Where the government's going to just print a lot of money and give it to you. And you think, wow, okay, nobody's ever done anything for me before. Now the government's working for me. And so you're liable to vote for something like that if you're not really paying attention and you don't obsess about finance all day long like you and I do. It might just sound like a good idea, free stuff. And so we get ourselves into a huge amount of trouble when we ramp up government spending of whatever kind targeted at any one constituency. So, I think the whole system, we have a crisis before we can fix this because people just aren't paying enough attention. You need something serious to happen to get everybody's mind focused on this. And then we have a debate about the nature of money and the role of money in a modern capitalist economy and the role of government in a modern capitalist economy and whether we should even have a modern capitalist economy. And we work it out. But that's not this time around. That's not this election.
John,
maybe the next one.
John, we're getting to the 30-minute mark, and I really appreciate your time and coming on the show with us. So remind everyone what they'll find at dollarcollapse.com. You told me about something new that you're starting to do, so let everyone know about that.
Yeah, dollarclaps.com is a site that covers a lot of this stuff, updated continuously. And I'm just starting to do podcasts now. So there's a link on the site that will let you sign up for kind of a subscription where they just send you a notice whenever it comes out. Or you can just email me at info@dollarclaps.com and I'll put you on the mailing list.
John, thanks so much for coming on the show with me today.
Sure thing. Enjoyed it, Kenneth.